Hi everyone, I'm Zach with the Money Channel, and I think it's best that we dive into it. As an overview, JPMorgan Chase CEO Jamie Dimon says we are near the end of the banking crisis. And so in this Reddit thread, essentially Jamie is being accused of sending out mixed signals. On April 6, 2023, to CNN, JPMorgan Chase CEO, who is often seen as the voice of the financial industry, believes the fallout from the crisis is likely over even if the Fed doesn't cut rates. Could there be more bank failures? I don't know, Dimon told CNN on Thursday, but if there are, honestly, they'll be resolved. I think we're getting near the end of this particular crisis. 2 days prior to shareholders, he said of the latest financial shock in his annual letter, the current crisis is not yet over, and even if it is behind us, there will be repercussions from it years to come. As I write this letter, the current crisis is not yet over, and even when it is behind us, there will be repercussions from it for years to come, he said in his annual letter. The recent failures of SVB in the US and Credit Suisse in Europe and the related stress in the banking system underscore that simply satisfying regulatory requirements is not sufficient. Risks are abundant, and managing those risks require constant and vigilant scrutiny as the world evolves. So now let's hear what everyone has to say about this. To be clear, none of the comments here reflect the views of the Money Channel, but let's jump into it. He may be a great CEO, but I think he mostly is walking back his statement now, which means what he actually thought was true was the first one. Either way, there appears to be another soft version of a Fed put on this crisis. Either people told him to stop spreading fear, or he knows there is more to come, that's why he said this particular crisis. Repercussions for years to come is not fear-inducing. Yes, that's why I assume he was doing damage control with the recent interview. I mean, by the time we hear about it, it's over. Doesn't mean the consequences are over, but the long-term uncertainty is probably out of the system now, which is all people thinking on that scale care about. Source being some articles I read by the people that are the reason everyone is so paranoid in this thread, and my butt. Looks like we are going into a banking crisis, everyone. My first reaction to this headline was, ah crap. Dimon is not Kramer, although he is known for changing his public opinion frequently depending on what benefits him and his bank. That is his job. A CEO isn't some oracle of truth. They reposition themselves frequently to ensure their company is headed in what they believe is the right direction. Jamie is a very, very good CEO, even if he might personally be a douche trowel. It's not his job to call Bitcoin worthless and a fraud, then say actually the blockchain is really valuable, then go back to calling it a fraud. I'm not talking about him updating his opinions based on the market realities, I'm talking about fabricating whatever opinion benefits him at that particular moment in time. Let's also not pretend that Dimon doesn't constantly raise alarm bells saying the market has a horrible outlook only to purchase equities and immediately change his tune, or vice versa. That's lesson 101 in the Chase playbook. So he's doing what you expect a CEO to do, benefit their company. You have to get it through your head that he's never going to hold on to a singular position, none of them will. The faster you learn that, the quicker you'll make money. Imagine if the big banks blew the banking crisis over proportion just to make a quick profit and acquire smaller banks. We are at the end of the banking crisis, the one over commercial real estate paper is just getting started. People still need commercial real estate, there was a huge boom, so this is a correction, not the end of days. Commercial real estate is a huge necessity. You are thinking black and white. Of course people need commercial real estate, but they don't need as much as they did before, especially office space in the center of large cities. And a lot of those buildings are highly leveraged because of previous cheap money. So if they can't cover the mortgage because they aren't making the rental income, we will get defaults. They can't refinance because interest rates are too high, and that will roll out over the next few years.